Good morning. Good morning from Los Angeles. How's everyone doing? Uh, what happened yesterday deserves the red hat. Extra sauce. We need extra sauce. As today's live stream title indicates, bloodbath everywhere. And do we buy the dip? Is today's rally dependable? We'll discuss all that. We'll discuss a couple other things. If anybody wants to come on from X or YouTube, which I think this is live on, here's the link. Here is the link. Here it is. There it is. If you guys want to come on, discuss anything, I'm game. I have some time. Probably go about an hour, maybe a little longer. Go through the positions. Tomorrow is hopefully the government's going to open up. Maybe Friday, maybe next week. I don't know. I'm not missing him at all, actually, but it's okay. So what's going on? What happened yesterday? Suddenly, we have questions rising about AI, the AI trade, the bloated, ballooned up, bubblicious AI trade. I mean, I've been saying this for a couple of months now, but then it's all right. Uh, you know, not Michael Saylor, what's his name? Michael Berry, the infamous or famous short who made some decent money, billions, shorting the housing market. Okay. Look, he's been saying we're going to crash for 3 years now. Look, every broken clock is right twice a day. Obviously has some pull. He said he's shorting Palantir and Nvidia. Yeah, fine, whatever. My point in all of this is experience helps, folks. Bubbles do get created. I was trading during the 2000 bubble on the desk, and what I've seen is amazed me then, and to a point it amazes me now. Are there similarities between 2000 and today? There are definitely some, and those stocks are getting shot. I have videos on the channel. So before I start anything else, let's go through the schedule. Trading with Sergio every Monday and Wednesday, 10 a.m. Pacific, 1 p.m. Eastern. Power Hour every Friday, 10 a.m. Pacific, 1 p.m. Eastern. And today is the day of Members Live. We're going to lick our wounds and hopefully not put too much salt on it. What happened yesterday is proof that we walk up the stairs and take the express elevator down. Don't ever forget that, especially if you're dealing with stocks that have no earnings. Some of them have no revenue, but then they get pumped. You got to be careful with that. When momentum is going this way, everything is great. When momentum is going this way, which it has been under the surface for a while now, actually, is something else. Because if you look at the index, you wouldn't think that much damage is being done. Massive amount of damage was done over the past month or so. But that's another thing I was talking to my members about, right? Under the surface, the current is very strong. If you're going against it, you're going to get hurt. Above the surface, the indexes 1% from all-time high. Yesterday, Twitter was full of screenshots of people's accounts going down hundreds of thousands of dollars. Okay, well, if you're dealing with those stocks, you're going to pay the price. What else? YouTube channel just hit 3,000 subscribers. Nothing major, but it's a milestone. Every 1,000 is a milestone. I appreciate the support. If you do like the content, please put a thumbs up and share. I think I'm putting out really good information out. If nothing else, I'm sharing my 30 plus years of experience with you all. And even with that experience, I got hurt yesterday because what happened to crypto, what happened to Bitcoin, to Ethereum, and it's difficult. I mean, in these times, you either circle the wagons, and if you do trust your facts and thesis and structure trades around it, yeah, you're going to eat it. Like I'm eating it on SharpLink Gaming. I do trust my thesis. It's a long-term trade for me, but then unrealized gains massively affect your equity. There's no ifs and buts about it, and so do unrealized losses. I have tons of those on SBET position, which I'll go through in a minute. On this channel, I'm full transparency. I put wins, gains, losses, unlike the YOLOers on X who are crying now, because they're in some garbage stock that didn't belong where it belonged, and then now, down 40% with the market being 1% from all-time highs. Okay, I mean, you're playing with fire, you're going to get burned. No remorse, no thought about those folks. So buyer beware is always my point. What you're getting into. Do you have an exit strategy? What's your risk tolerance? All these things. Management, obviously. But you can't just put your head in the sand and say everything will be fine. When I go through my SBAT position, I will tell you guys, even with defined risk trade, I'm eating it. I mean, there's no ifs and buts about it, but we'll get there. So, like I was saying, thank you for the support for the channel. Please put a thumbs up. If you're not subscribed, please subscribe and turn on notifications so you get notifications of the live streams and other content that comes on board. Every Monday, Wednesday, and Friday, I post my positions, open positions, on the community page of the YouTube channel. Wins, gains, losses, you guys can figure it out. None of this is trading, financial, or investment advice. Do your own due diligence. Don't do what I do. What I do is very risky. It works for me. It may not work for you. Your account size may not be able to handle everything that I'm doing. So with that said, yeah, let's get into it. Let's get into the AI circle jerk. AI circle jerk continues. OpenAI being the lead actor. Um, I'm going to say something that you guys may not like, agree or disagree, but I don't trust Sam Altman at all. I don't know why. I play quite a bit of poker, and I can read. He has tells that I'll keep for myself, but I don't trust him. So everything that comes out of his mouth seems a little fake to me. Obviously, he's very measured. He's the CEO of a supposedly trillion-dollar company, and he has to watch what he's going to say. But just his mannerisms and his actions, the way he speaks and the way he answers questions, the way he threw a fit on an recent interview and walked off because they asked him about, you have a $1.3 trillion spending budget on data centers and everything else, and your revenue is only, I don't know, 13 billion. 1.3 billion. I don't know. He didn't like that question. He even said, well, go ahead and short the stock then. Well, Mr. Altman, we can't short the stock. Stock is not public. I wish I could. At the 1.2 trillion level, I will 100% short that stock. So Sam Altman, I don't trust. Elon Musk, I trust. But then he was on Joe Rogan's podcast a couple days ago. I watched the whole thing. And a lot of these folks who are involved in AI, in the AI world, especially the powerful CEOs of these companies, they don't answer the question straight up. Like Elon said something that, hit me kind of sideways, which was, he said, AI is going to create universal high income. Forget about universal basic income. What does that mean? I mean, Joe Rogan is Joe Rogan, right? He's a meathead. I like Joe Rogan, but I don't think he understands finance. I don't think he understands business to a point anyway. He gets these great guests, obviously, to interview, but you need to push these people to ask them the question. You know, they always compare it saying that, oh, look what happened when horse and buggy went away and steam engine came. Everybody was worried that jobs were going to get replaced. Not the same thing. I don't think it is. Although Elon said it's a tsunami, I agree with that. How's the country going to look like? How's unemployment going to look like? How many people are going to get laid off? We're already seeing the effects of AI in the recent college graduates. Recent college graduate unemployment rate is twice the unemployment rate of the country, almost 10%. What is happening already, right? So, and the future. I mean, a couple of years down the road, how many jobs are going to get replaced? Elon said one thing I agree with. He said trades are going to do well because AI is not going to be able to do things with, you know, basically whatever you can do with your hands, a plumber, an electrician, a roofer, an air conditioning contractor, those people are going to do well. I agree. But what's going to happen to millions of truckers, transportation, all this stuff, autonomous vehicles, autonomous trucking? I mean, look, there's a lot that's going to happen next couple, 3 years. With the advancements in AI, I don't think we have even scratched the surface, but I want to question Elon about universal high income. What does that mean? He basically said, you know, you're going to, universal high income means you can do whatever you want to do, whatever you're passionate about in life. You can go play golf 24 hours a day. I'm like, no, I don't want to do that. I want to have meaning in life, and I'm a human being. So if I'm getting replaced, obviously, I'm not going to feel too good about it. Yeah, I have questions about AI, but then suddenly, out of the blue, when everything was fine on Monday, what happened yesterday? Everybody decided, is the AI trade a bubble? I'm like, huh? Yeah, I think it is. I put a video out, popular video. You can go check it out on the channel a couple days ago. No, I think yesterday. The circle jerk, right, continues. I call it the circle jerk because I look at it as this way. So let's say we have 4 banks, which we have 4 or 5 companies that are just basically the money is sloshing around those 4 or 5 companies. Obviously, NVIDIA, Oracle, OpenAI, AMD now, you know, and a few smaller ones. So I'm Goldman Sachs. I go give Bank of America $10. Bank of America stock goes up 20%, 30%, hundreds of billions of dollars of market cap. Okay, well then Bank of America turns around and gives the same $10 to Wells Fargo. Wells Fargo does the same thing. And then Wells Fargo goes and gives it to JP Morgan, and JP Morgan does the same thing. And then JP Morgan finally gives the same $10 back to Goldman Sachs. Goldman Sachs goes up. I'm like, this is all created money out of thin air. You know, these data centers that are being built into the trillions now in CapEx, where is the ROC on this? Where's the long-term ROC? I don't see it. If anybody knows it, can come and educate me about it. But at some point, these are like Facebook, same thing, right? These are AWS, Amazon, OpenAI. Every time OpenAI does a deal, 30 billion, 50 billion, 100 billion, the Amazon goes up and Facebook does what it does or whatever. But my point in all of this is, out of these trillion-dollar investments, you need to get an ROI. You need to get return on investment. You need to get return on capital. Where is it? How's that going to work out? It's not going to be by $20, you know, subscription to OpenAI. It's just not, right? I mean, even if, okay, we have 8 billion people on the planet, even everybody does it, okay, you know, which we know it's not, but where is the ROC on this? I don't see it. Now, unless AI is going to create a ridiculous amount of productivity, which I think it already is, I'm using it, but what I'm using doesn't even scratch the surface, right? So are we going to eradicate diseases with AI? Are we going to replace doctors? I don't know what's going to happen. I really don't. And but I don't also see this capex continuing, because that's what's holding the, you know, economy up, folks. Underneath the surface, the average American is not doing well. Okay, auto loan defaults are going through the roof. Credit card defaults are going through the roof. Fed is cutting rates, seeing trouble ahead, but then the 10, 20-year note keeps going higher. Look at the chart of TLT. You guys will understand. So there's a lot of mixed stuff that's out there, and within that, obviously, you know, we're getting these sell-offs in the. If you look at the advanced decline line of the market, completely unhealthy. 10 stocks are pushing the indexes up every day. And a couple of them got shot. The generals are leading. You know, we know what happened to Meta. We know what happened to Netflix. But the point in all of this is the market's not healthy. But then index is not what you own. Some people, a lot of people do, obviously, passive investing. But, you know, if you owned, we'll go through some charts. If you own Meta, I don't know. If you owned a lot of these AI power generators, you know, a lot of these quantum stocks, yes, they're still up tremendously for the year. But if you got stuck with some of these, got involved in the hype and YOLO'd into some of these, you got hurt badly. They're down 40, 50% already with the market just being down 1%. I know from myself, like today, market's rallying, but I gave up yesterday. I'm not gaining today. So you got to be careful with that. That means you're in the underperforming assets, but then I cannot make myself go buy an Oklo. I cannot make myself go buy quantum computing stocks. So, yeah, I mean, your account's positions show how quickly you can recover. And if you're not recovering on up days as fast as you're getting hit on down days, that means you're in underperforming groups. And that's something I watch quite a bit. But then I have the positions on with a little bit of longer duration in mind. However, you know, losing money is losing money. I mean, I'm up for the year nicely, but the point is, the point is when you have days like yesterday, when you get smashed, and then the recovery day is today, and you don't get back to what you gave up, it's difficult because on the next leg down, what's going to happen? You're going to get smashed again. So be careful, folks. You know, the market's kind of treacherous at the moment. I mean, I'm not calling, you can't call it a bear market. You can't call any of the stuff. Whoever's doing that on X or other places, they're fooling themselves. You know, but you can keep calling the bubble. But from my experience, what I know is these things start out of the blue and nobody knows what's going to happen. It was yesterday the first shot across the bow of the AI chip. Yeah, looks like it. Looked like it. But again, you know, in comparison to 2000, not the same situation, obviously. All these companies that are involved in the AI circle jerk have massive earnings, massive cash flow. They can support all this. In the 2000 dot-com bubble, you could have put .com behind my name and I would have gone public and my stock would have gone up 300%. And then another 10% every single day after that. I was on the desk. I was trading. We're a profit center. You know, we're buying and selling shares, obviously. But I was like, I can't believe what's happening. And I thought it would end, and it lasted another 8 to 12 months before it ended. But when it ended, we know what happened. NASDAQ went down from 5,000 to 1,000. And 75 to 80% of these companies disappeared, right? Is it going to be the same thing? Probably not. But if that happens, you know, what you're holding, buyer beware. What you're holding is going to get crushed, especially if they don't have earnings, especially if they don't have revenue. Some of these companies that are just getting pumped, they don't even have revenue. I mean, top line, bottom line, simple. You don't need to be a, you know, accountant to understand that. You know, profits are the mother's milk of every corporation. Free cash flow, none. They don't have anything. And companies are worth 20, 30, 40 billion dollar market capitalization, pulling forward or pushing forward the potential. Well, I don't believe the potential is worth that much. It has to be proven. And then when the sell-off comes, those stocks get crushed. And you know, if you're into those stocks, if you're buying into the hype, you're going to get hurt. So what else is going on? We don't have economic data because the government's shut down. There's talk government will come back in a couple of days. This is the longest government shutdown we ever had, by the way. I'm not missing Washington, honestly. And then let's talk a little bit, couple of minutes about the elections that were yesterday. If you're in New York City, I feel bad for you. I love that city, and now you have a socialist mayor. We'll see what happens. This is a big experiment for New York City, actually. New York City voted in big numbers for Mamdani. We'll see. we'll see what he does, because during his campaign, he was talking all kinds of ridiculousness. I mean, there is one stat that I need to stick with is 80% of the taxes in New York City are paid by 5% of the folks that live there. I don't know. I'm assuming they're rich, right? But we'll see. We'll see what happens. You know, a lot of people, a lot of politicians, what they talk during the campaign, they don't really follow up. But he seemed like he seemed serious about what he talked about, and he got voted in. So it's a big experiment for New York City. It's a big change, and we'll see how it goes. I'll probably be visiting New York City in a couple of months, and we'll see what the changes are, if things are better. But also, a lot of gubernatorial elections took place yesterday, and the Democrats absolutely smashed it. Virginia, New Jersey, and you're going to say, well, governors are not important. No, governors are very important. Look at our governor in California. He has aspirations to become the next president. In California, we just passed a proposition which I think is going to, the Dems passed it through because California was just about to turn red, and it didn't work out last time. But then now they passed Prop 50. If you don't know what it is, Google it and read about it. They changed the voting districts again. They redrew the maps again. Now for California not to turn red. California turns red, the Republicans will run the presidency for the next 100 years. But it didn't happen. Well, maybe, I don't know. We'll see how it's going to be. I live in California, obviously, north of LA. I mean, I like it. It's gone down the shithole, obviously, but then, hey, it is what it is. You pick a place and you live. So the elections maybe have something to do with it. Maybe markets rallying in advance of the government shutdown ending. I am not sure, because market did not sell off when the government shutdown happened, honestly. I mean, we're literally 1% from all-time highs. If you look at the index, there's nothing going on. But I bet you your portfolio got crushed last couple of weeks. So weather doesn't pay the bills. Anyway, so good morning, everyone. SJ, good morning. Traveler, good morning. So I put the link up if you guys want to come on, grab it and show up. One other thing, my third edition of the newsletter went out from my website to all the subscribers. So I am on a mission. I would like your help in this mission. My mission is financial literacy. I think it's lacking sorely in this country. I think it's on purpose that we don't teach our kids all the way from elementary school all the way to college anything about finance. And we need to make sure we do that. And how do we do that? I have a website. Yeah, you can go to Gemini or ChatGPT and ask any question. But then I still believe that humans are worth something, right? And although you may get good answers on some of the LLMs, you will, I'm pretty sure. But what to do with that is the key, right? Because again, I said this before, finance could get really complicated, and finance is boring. Unless you're YOLOing options on Robinhood, that's a different story. You're getting the adrenaline rush. But long-term investing is a must in this country, and we don't do it enough. In fact, Kobesi Letter had a great tweet out the other day. If I didn't delete it, I'm going to read it, honestly. Let me read that. Let me see. I probably did delete it, but if I didn't... Oh, no, I didn't. Okay, here it is. The wealth gap is broadening. Look, I'm a capitalist, okay? I'm 100%. I was on Wall Street for 30 years, so capitalism is the best system on the planet. But Kobesi Letter says the wealth gap is broadening. I agree. Listen to these stats, folks. Top 10% of U.S. households now hold 87% of all U.S. stocks owned by households. Let me read it again. Top 10% of U.S. households now hold 87% of all U.S. stocks owned by households, with the top 1% alone owning 50%. Okay, next one. By comparison, The remaining 90%, so 10% owns 87%, right? Okay. The remaining 90% just hold 13%, while the bottom 50% hold only 1%. So top 1% owns 50%. The remaining bottom 50% owns 1%. On top of this, the top 10% control 84.4% of all private businesses and 44% of all real estate. In total, top 10% of households reflect 67.3% of nation's entire wealth. The wealth gap has never been bigger. I 100% agree. So what do we need to do? What do we need to do to solve this problem? We're not going to go socialist. Hopefully not. Okay. But what do we need to do? Well, we need to inform. We need to educate. We need to have resources to improve financial literacy in this country. And financial literacy starts small. Okay. A lot of people, according to those numbers, can you get into the top 10% by just investing? Yeah, long periods. It's going to take long periods of time, but you can. But you have to start. Today is the best day to start. Yesterday was the best day to start. Tomorrow is the best day to start. You have to at least invest, because if you don't, you're going to be part of that statistic. But more importantly, you are going to lose about 9 to 10% of your buying power every year in this country. Unlike what the government says. Government says everything is fine. Inflation is under control. Bullshit. It's not. I've been saying this for decades now in private circles and now on this channel. You are losing 6, 7, 8, 9% of your buying power every single year. The dollar is losing its value. And it's on purpose. Debasing of the currency. We talked about the debt. We talk about all that stuff on this channel. So you need to keep pace. Okay? How do you keep pace? You have to invest in hard assets. That's why the top 1% keep collecting hard asset after hard asset. And the effect of compounding comes into play. So the second actually newsletter that went out from my website to the subscribers was talking about compounding. In fact, it was talking about Warren Buffett. You guys know, hopefully you guys know this, that Warren Buffett gathered or acclaimed all this wealth after the age of 60, because that's when compounding kicked in. Power of compounding, okay? Power of rule of 72. How do you invest? I want to make this simple. I want to get financial literacy to be the talk of every dinner table on a family gathering, at parties, because financial literacy is not about chasing Bitcoin or some shit altcoin. Financial literacy is passive investing, active investing. You could do both, but you need education. You need an understanding of the basics. And the basics comes with curiosity. I want to create that curiosity. I want that to be your addiction. I don't want you to go to Starbucks, spend $7 every day on a latte on your way to work. Maybe do it a couple times a week. Take that money, start investing. Okay? You must invest. If you don't invest, you're going to be left behind, just like those folks. Part of the statistics. And the rich are going to get richer, and the Dems are going to complain. The rich are just investing. They have been investing. They see what's happening. They have the playbook. They just go collect hard assets. What are those? Gold, silver, crypto to a point, stock market. Look at all-time highs. Passive investing. Just put $100 a month into an ETF. Don't even look at it. Don't try to time the market. Time spent in the market will beat timing the market any single day for the average person. I trade and I invest. Two separate accounts. Don't mix business with pleasure. You must invest. So how do you start investing? Well, that's what I'm doing through the website. That's why I'm sending out newsletters every Monday at 12 p.m. Pacific. I'm not selling you anything. I am not asking anything from you other than your email address, so it gets dumped in your mailbox. They're not long articles. I understand attention span, but we need to do this. We need to do this in this country. Why should everyone, and Robinhood does a great job. I have a small Robinhood account, but I trade with Thinkorswim, but they have democratized investing. They're doing great things. Go open a Robinhood account. Start dumping some money in there. Don't trade, don't YOLO, don't go options, don't go zero DTs. You can do all that later. Start investing, especially if you're young, because the power of compounding is undeniable. Undeniable. I don't care who says what. Don't look on the, social media, some young shot driving a Lamborghini. That should not be your goal. What should be your goal is generational wealth. How do you create generational wealth? Especially if you're a young person, because you have time on your side. But that doesn't mean if you're older, you should not invest. You should definitely invest, because if you don't, you're going to be left behind. You're going to be part of that statistic. And a lot of folks that I talk to, because I have another channel, much, much larger channel, that I deal with gig workers. They go, Serge, I don't have money. I drive for Uber. I drive for Lyft. I do DoorDash. Of course you have money left. That means your budgeting is messed up, just like the U.S. government budgeting is. What do you mean you don't have $10 a week to invest? $20 a week? $50? How about you don't eat junk food when you're driving? Take a sandwich from home. All I'm saying is there are ways to invest. You must invest. Start today. And then you're going to say, oh, market's very high. And go pull up, ask Gemini or Grok or ChatGPT, give me a chart of the S&P 500 going back 30 years. Yeah, there have been crashes. Yeah, there have been pullbacks. Where are we now? That's what the rich have figured out. The rich have figured out interest rates were low for 15, 20 years. They borrowed money, bought assets. That's why real estate does what it has done, what it's done. They bought stocks. They bought gold. Look at these. You need to be part of the game. If you're not in the game, and then don't complain. If you're left behind, don't complain. But it all starts with financial literacy. It all starts with proper education. It all starts with proper information. And it all starts with simplifying things. I can talk to you like a hedge fund manager, and you will not understand a goddamn word. The point I'm trying to make is talk to your kids about it. If they have an interest, right? Just get them, engage them, explain to them. Don't be the parent that goes home after a long day of work. Oh, the kid asks you something. You go, oh, I'm so tired today. Can we do this tomorrow? No. The kid has an interest. Do it right there. I personally think this should be mandatory curriculum in elementary schools. Start there and then go on, because it's pretty obvious to me it's not. I mean, I have a kid in college, a daughter, and I have a son in high school. There's no classes teaching him about finance. And then the kids go through TikTok, go through, YouTube shorts, and then they see some jackass, showing off his Lamborghini because he day traded and made some money. No, that's not investing. You could do that if you want, but that guy will disappear. You don't know his account. You don't know if it's vetted. You don't know if it's audited, nothing. So forget all those things. Do it for yourself. Do it for your family. You need to start investing. So with that said, go to the website, www.sergioavadian.com. Click on the blue subscribe button. Honestly, I'm not selling anything. All I'm asking you is your email address, so you can start getting these articles. And again, you can put the pieces together. And we're going to do this in a way that simple, start small, explain you the power of compounding, explain you the power of 72. What are ETFs? All these things in the first 3 weeks already, those are there. There are about 7 or 8 articles on the blog on the website. So go take a look. They're not that long. You can skip through it. And the other thing I'm going to early next year, start doing is webinars through the website. I'm like, I need to educate folks. I mean, if I can help, like I said, I'm part of a major gig worker channel. Maybe I'll start there because I already have an audience there. Maybe I can convert those people, or not convert, but make them understand that investing is the key, and then move on. But this is for everyone. This is not for regular folks. This is for gig workers. This is for everyone. But you guys must understand investing. If you don't invest, you're going to be part of a sad statistic. If you do invest, you're going to have a much better life, because you just want to keep pace with what's going on, right? Do you want to keep losing 6-7% of your $100 bill every year? You know, proof is in the pudding. Go to Costco. What did your $100 buy 5 years ago at Costco? I'll bet you about 7, 8 items, maybe 10 items. They're all priced at $8.99 to $11, $12.99. Go to Costco with the same $100 today. I go to Costco every week. What does your $100 buy today? Maybe 5 items. Maybe, right? Because everything is priced now $18.99. It's the same damn product. So understand that. Invest long term. You will not go wrong. So good morning, everyone. What is going on? What else? I don't know. We'll go check the account. Let's see where we are. I'm not hearing any dings, so we must not be doing stuff. What else I wanted to say? No, that's about it. If anybody wants to come on, the link is up here. This is actually, let me put the website up there, www.sergiovadian.com. Again, go subscribe. And if you do like the content, go share it. Share your newsletter with someone so they can subscribe and they can start improving their life. Because we all need to do this as a society, right? I'm willing to do it. I'm willing to do my share. And if you do it, I appreciate it. Again, I'm not selling you anything. I don't have a Discord. I'm not doing any of that. All I want to do is inform and educate and pass along my 30+ years of experience. And this is not just only for newbies, by the way. You could be new, you could be intermediate, you could be advanced, you could be a trader, there's something for everyone. It's going to be on the website. That's why the YouTube channel is a little bit more for advanced and traders and things like that. So good morning, everyone. Let's see where we are. Should we go to the positions? Let's do that. Hopefully you guys can see this. Let's see where we are. All right. Talk of the town. ASST. I have a massive option position on it, but we'll see. We'll see where that's going to go. Actually, I'm going to do a trade in a second. Give me a minute. And I'm going to do actually 2 trades. Okay, we're going to talk about crypto when I get back. So ASST, I am in a call debit spread. I was balanced. Now I'm not. I'm just going for it now. I'm long 250 of the January 2.5 calls on ASST. January 2027, going out a year and a half, almost year and 4 months. I'm long 250 of those. I'm long 150 of the ASST. That's the symbol. $5 calls. And I was short 400 of the $10 calls. So this is a call debit spread. 2.5, 10, 5, 10. 2.5, 10, I paid 40 cents for it. And 5, 10, I paid about 33 cents. So 33 cents could turn into $5 and 40 cents could turn into $10. But we'll see we'll see where it's going to go. The point I'm trying to make is I'm in the trade. A lot of talk going on Twitter about ASST. Look, you got to do your own due diligence. I have done my due diligence. I think it's worth a shot. I'm put up very little money to play the game. That's what you can do with options. And again, I'm going out to January 2027. So stock is 146, up about 17% today. I think it has a shot if it becomes one of these viral meme stock kind of a situations. I think we have a shot here. So that's the first position. Second position, Beyond Meat. I was long 300 puts. Now I'm long 200 puts. They go out to November 21. But what I did last 2 weeks, my theta decay was killing me basically. So what do you do when you have a theta decay situation, right? You don't want to just hold the bag. You turn the long puts into put credit spread. Last week I sold 225 puts against my long puts, and they expired worthless. And then this week I'm short. These are 1.5s weeklies. Okay, so I'm selling. I sold 175 of the 1.5 puts at 16 cents. They're 25 cents. I'm not worried because my long puts are giving me cover. Stock is 130. Obviously, I'm in the money. Depending on where it ends on Friday, I'm either going to get assigned 17,500 shares of Beyond, which I don't mind, at, so last week I took in 9 cents, this week I took in 16, so it's 25 cents. I'm going to get assigned. My call space is going to be 125. I will immediately go sell weekly, keep the puts as protection on the downside. But I will immediately go sell 1.5 calls, probably about 15, 20 cents. So start immediately lowering my call spaces week by week. So I don't mind that. I am long 15,000 shares of Fathom Holdings. It's a real estate brokerage, title, and mortgage company in the Carolinas. They're the largest. They keep expanding. They did a secondary at $2. I paid for 15,000 shares. My average is 163. Stock is 132. So if you're going to get in, you're going to get in cheaper than me, which is the case. I'm always early in these things. Not always, but most of the time. I do like the company. I don't think they need any more cash, no more dilution. Earnings are coming out. So again, none of this is trading, financial, or investment advice. I started opening a position on NVTS, Navitas Semiconductor. Stock was as high as 17 with this AI whoosh that we're experiencing, down to 978. I put on it's kind of a synthetic actually. I sold the 10 puts today for December and bought the 10-15 call debit spread with that money, but I did it with credit. So if I can do it with a little bit more, I started at 45-cent credit. Stock is 980. I will add them to them now actually if I can do it. Let me see if I sell the December 10 puts. I'm just playing for a bounce. We'll see. And again, size correctly, folks, especially if you're going to deal with these AI circle jerk names. We're going to sell the 10 puts. December now, we're going December 19th. We're going to buy the 10 calls. We're going to sell the 15 calls. 65 cents. Yes, we're definitely going to put on 10 more of these at 65 cents. I'm only 10, so we're adding 10 more. 65-cent credit. So you guys understand what's happening, right? If December 19 comes, stock is under 10, I'm going to get assigned 1,000 shares. 10 minus 65 cents. But if we do rally from here, get back to 12.13, the puts are going to go down in value, which I like, and my call debit spread is going to print. So I can only sell puts at $1.50 and then have the cost be $8.50, but I don't want to do that. I want some upside kicker here. So I'm going to do 10 more at 67 cents now. Let's see, 155, 160, 45, 135, 140. Yeah. Let's do them at 65 cents. Let's give the market maker 2 cents advantage. Okay, those are done. So we did 65 cents. We'll do them again at 85 cents. So we'll just kind of scale in slowly. Stock is 971. Okay. Let's put another order in for 85 cents credit. And we'll keep adding every 20 cents up. That's how I do it. Scale in, scale out. Otherwise, don't shoot your wad all at once because I don't know where the stock is going to stop going down. I mean, it's about a 7.5 point correction now, folks. Okay, so this is what happens. But now I think this is a proper spot to get in. Let's put another 10 at 85 cents in case we get a whoosh here. So selling the 10 puts December, buying the 10 calls. Buying the 10 calls and selling the 15 calls. So I'm selling the puts to finance the purchase of a call debit spread, for lack of a better word. 70. Let's do it. Let's do it at 80 cents. 10 more. No, what did I do? 45, 65, 85. 85, yeah, let's go. 80 cents. 85 cents. We'll change the price. We're going to add 10 more. So it's almost like a synthetic. Synthetic would be selling the puts behind the calls. This is like a kind of a synthetic. By selling the 15 calls, I'm taking in money, lowering my cost on the call debit spread. And I could always turn the short put side into a put credit spread, but no need. I think somewhere around here, maybe nines, low nines will arrest the downside. 10, 10, 10, 85 cents. Sounds good. Order is in. If it gets there, we get filled. Next position, Sharpling. There's my headache. I'm literally down like 25K on this trade. And I didn't even do much about it. I can't do anything about it. I'm bullish on Ethereum. I've spoken ad nauseum about these things. If you don't understand multiple the net asset value or market cap to net asset value, do not get involved in these DATs. That's our digital asset treasury companies. I see a lot of Twitter bullshit. Oh, Tom Lee is the GOAT. I trust Tom Lee. Tom Lee doesn't do shit. Again, I think he's the GOAT. I like Tom Lee quite a bit. But do not invest in these things. As I put a video yesterday, these are not regular stocks. They have no earnings. They have no employees, basically. They have no product. They have no free cash flow. They have nothing. They basically own Ethereum. If you're bullish on Ethereum, you should. If you're not bullish on Ethereum, you should know, but you should also pay attention to MNAV. So why didn't I do BMNR? I did SBAT, Sharplink Gaming. Same thing. It's a DAT. You know, I'm eating it. I mean, and I have defined risk downside trading on, meaning I have put credit spreads. So I have 80 put credit spreads going out to January 2026, 15, 12 and a half. I did them at 160. My max loss is going to be 250, obviously, because it's a put credit spread. If Ethereum goes to 2,500, this is going to be $8. But then I can't lose more than that because I'm long the 12 and a half puts, but I'm also short the 15 puts. So that's a put credit spread. With that money, I turned around and bought 100 again, January 15 calls. I'm eating it there. I'm long 2,000 shares at 17. I'm eating it there, but I've been selling calls. So like I sold the calls again for this Friday. I'm taking in like dimes and nickels, but hey, it is what it is. Let me see if I can sell these 15s against my 15 January calls. It's a battle. We got to battle it out. That's all we can do. I'm not doing this because, so by the way, I'm doing this because it's 0.85 MNAV. I'm buying $1 for 85 cents, but if Ethereum keeps going lower, does not matter, 0.85 MNAV, folks. A lot of people out there, man, that are just pumping these things up, and I'm going like, what are you guys talking about? These stats are the tail. Dog is Ethereum. It's just going to wag the tail. If Ethereum doesn't appreciably go higher, none of these are going higher. And if Ethereum goes lower, which it did, 4,500 to 3,300, I don't know, it's about 30%. Well, SBAT went down 30%. BMNR went down 30%. So I'm going to try to sell these 15s against my 15 calls, pick up a couple of pennies. Let me put that order in. I got to sell 100 of those. I'm long 100 calls. So last week I sold them at 4 cents. This week 2 cents. All these 2, 3, 4 cents help. This is almost like a poor man's cover call. Let's see if we can get 2 cents, couple $100 lunch money for a couple days. You have to do this, by the way, folks. Don't ignore it. 200, yeah, I did that. Send that in. Okay. And last but not least, I'm on the 2x ETF of Solana. I put on 45 put credit spreads on Solana, regular expiration November 21st. I sold the 12s, bought the 10s. I did those at 98 cents a piece. Again, put credit spread, defined downside, right? SOLT is the symbol. It could go to 0. It won't matter. Max loss on this for me is $1. So I put on 45 of those. The position's doing nicely. I'm up like about $1,000 on those. I'll just keep that. And that's where we are. I mean, it's called trading. That's all we're doing. Gotta trade and invest. So those are the positions. I'll post these today on the community page of the YouTube channel. You can check it out. None of this is trading financial advice. What I do is risky, as you guys can tell with my SBET position. If you don't have the stomach for it, or the account says, I'm trading with a 6-figure account. So I do have the stomach, and I'm still have plenty of dry powder to add on to positions like NVTS. Actually, I was thinking of doing an Archer as well. And PATH. Those are the 3 stocks I'm going to try to pick up, and LAC actually. Lithium America. Trump invested in this. I'm not doing it because of that. I'm just doing it because this thing, they pumped it to 10.5. We're down to 4.5. I think low, a little bit lower, maybe 30 cents lower. I want to buy it. Just the shares. I'm not going to mess with options. Paths I want to get into. Oh, it's already turned green. See, that's what's happening. This is NVTS. Yeah, right about here. Nine-ish, low nines. I started now a little early probably, but low nines I think is. I was just playing for a couple point bounce back to 12.5. What else I was gonna do? Oh, Archer Aviation. Yeah, we're on 200 EMA. I want to definitely. ARCX is the 2x ETF of that, so I think I'm gonna probably trade that one. ARCX is the simple as 1276. ACHR. Either I'm gonna do the same thing I did with NVTS, sell the puts, buy a call debit spread, hopefully with credits. And if I get a sign, I'll take the shares. You have to start, by the way, when you're doing these things, you have to, first question you need to answer is, do I want to own NVTS at 9.35 in December? Okay, well, the stock is 9.85 now. Stock goes up, great. Stock doesn't go anything, it goes sideways for a month. You're at least starting with a credit, okay? So that's the thought process. Archer was 14.62. Joby is the other one. Yeah, it's actually looking better, but I like Archer at this point at 200 EMA. Every time we get to 200 EMA, we kind of arrest the downside. The red line is the 200 EMA, by the way, on my chart. And yeah, either a little bit lower or right about here. Let's see if we can do it. I'm going to go to December 19th, regular expiration. We're selling the 10 puts, buying the 10 calls, selling the 15 calls. 62 cents credit, but stock is already 9.52, so it's not giving me that much room. So probably not the best idea. I'll probably start buying shares of ARCX. Does those have options? The 2X ETF? It does. Okay. Let's look at November on that. Go a little shorter. Oh my God. Untradeable. Look at the spread on these things. Fuck. Yeah, never mind. We'll just buy the shares. We'll buy the shares when the time comes. No rush. By the way, folks, let things come to you. 3 P's, remember? Position, patience, position size, and planning. Have a plan. When the price gets there, you're not freaking out. You do the trade. Done. You have a plan. Have a playbook. Otherwise, trading is not going to work out for you. Definitely not. So we have everything in there pretty much, really. We're going to keep SOLT. We're going to keep SBAT. Unbelievable. Just like, defined risk downside trade, and you're losing money. I'm like, yeah, well, defined risk doesn't mean no risk, by the way. Defined risk means put credit spread. But what would I be if I had just sold the puts? Eating it, okay? I'm eating less, but I'm still eating. Eating, crow, that is. But we'll see. I'm long-term bullish on Ethereum. We'll play the game and go to the front, answer some questions, and then have a good cup of coffee. That's the S&P 500. I mean, this is 1% from highs. But then, you know what? Actually, let me just go a couple of charts, big charts, so you guys can see. This is the S&P 500. This is the S&P 500 going back 10 years, by the way. This is your investing picture right here. Where would you be in the last 10 years if you invested? Oh, yeah, we had a massive sell-off, short, quick one. COVID, 2020, 2022, massive sell-off. Great, yeah. And then April, tariffs, musical chairs, massive sell-off. Great, look where we are. You got to invest. I don't care who says what. You have to invest. If you don't invest, don't come complaining. Oh, the rich. Yeah, what about the rich? The rich deserve to be where they are. Anyway, so this is S&P 500, 1 year, 1 day. This is the triple Q. But then underneath the surface, right, look at some of these stocks, okay? Well, NVTS is a good one. Let's start with what I'm doing. There you go. 1779 high. We're just 970. 8 points lower, while the market's 1.11 single percent off the all-time high. This thing is down 50% almost. Okay? So you don't own the market. You own individual shares. Okay? There you go. Same thing. LAC. All the ones I'm looking to buy. 10.5 high, 4.5. Down 60%. Stock market's only 1% from the high. MP. Actually, I'm looking to buy that on the 200 EMA. 100 high, 54. Down 45%. METC. Same thing. 58 high, 23. This is just without the market selling off, folks. It's just 1% from the high. Oklo. All these nosebleeds. 194 high. Yesterday we hit 106. Okay. I mean, look, I'm being honest. This is what the market does. If you got caught with Oklo, if you got caught with Rigetti, if you got caught with IONQ, there's Rigetti. 58 high, 37 low. Again, look where these have come from. Okay. I mean, there's poster childs for every industry group. And then Michael Berry said he's shorting Palantir. Well, there's Palantir. You know, there's a little correction. 207 to 178. There's Meta. Actually, I want to buy Meta at some point. Add it to my long-term portfolio. Probably sell some puts. Look, these corrections are brutal. If you get caught in this, look, and the market just sold off yesterday and exacerbated the sell-off on all of these. We're talking stocks are down 40, 50, 60% from their highs, while the market's only down 1%. And if you're holding these, that's why you're going to get hurt. NBIS is another one. Actually, that bounced quite a lot. It went from 141 to about 90 in about 8 days, and then bounced all the way back. That's double top probably. That's probably a good short. ASTS, all these poster children. 103 high, 65 low in 5 days. Well, again, if you own these for a year, you're doing extremely well. But also know that this thing could go to 50. This thing could go to 40. Okay, if the market truly sells off. Okay, all these secondary stocks. I mean, they're all getting smashed, and people own these. They don't own the indexes. TLT is an interesting animal, isn't it? Look at that. Interest rates are going higher. Since the day the Fed cut the Fed funds rate, look at that. This is the 20-year inverse ETF. So if TLT is going down, the actual real interest rates are going up. There you go. Interest rates are going up. The bond market is not buying what the government's selling. Of course they're not. Why would they? Here's the dollar index. There's your dollar index. Actually, the dollar is rallying, which is not good. But in a year, 110 to 96, dollar index down 10% against other basket of currencies. That is devaluation. That is debasing of the currency. That's where your buying power is going poof. Now, unless your paycheck's going up 10% a year, good luck trying to keep pace with that. Gold bouncing a little bit. I think it's just found the base here, a bottom here. So probably a little bit more sideways, and I'll buy gold again. Instead of gold, though, we trade NUGT. There you go. That's the correction on that one. 190 down to 110. I mean 120. 70 points. We're talking about points, folks. Okay, it's unreal. These sell-offs come out of the blue, and unreal. Here's another one, another poster child. American Battery. 11 high. We're down to 4. So when you're buying these parabolics, folks, you better know what the heck you're buying, because otherwise you're going to hold a bag. And this is ASST 145. I have the position on. It's a lottery ticket type of a position, but it goes all the way to January, so I gave myself enough time. I didn't put any. Well, I put up money, obviously. I put up maybe 10K, but 10K could turn literally. They can turn to 400K. If stock goes to 10, 10K could go to 400K. Well, those are the type of positions I like. I mean, if I'm going to buy a lottery ticket, I'll give myself some time. And I mean, do I know everything about ASST? Yes. Yeah. Anyway, it was at 12, by the way. This is at DAT, DAT. They're trying to buy Semler Scientific, which holds almost 6,000 Bitcoin. There was an arbitrage there, which I did not do because I own Semler, but yeah. So a lot of talks on ASST. It's going here, it's going there. I'm like, from their mouth to God's ears. Hopefully it does a beyond. There's another one. Hold the bag. Beyond. All the YOLOers. This hit 10 in pre-market hours, by the way, folks. $1.29. Yeah. And they're still holding. Diamond hands. Diamond hands. The fucking thing is down 85%. Jesus Christ, man. You know, I feel bad for these people because they're so just, I'm not going to call them dumb. They don't understand the mechanics of this. Most of them, they just go, oh, just won't buy calls. I'm like, okay, go YOLO. Go YOLO. If you lose all your account, don't come to me. And so here's Ethereum. You know, again, all the BMNR furus. Oh, BMNR is going here. Idiots. BMNR is not going anywhere. Unless this goes. Well, here it is. That's Ethereum. Going from 4,500 to 3,200. What is that? 30%? Okay, let's look at BMNR in the same time frame. Oh, look, BMNR did not go up by itself. So BMNR, from when Ethereum was at 4,500, 67. Yesterday's low BMNR, 37. How much is that down? 40%? Oh, okay. And how much is Ethereum down? 30%. Oh, it even underperformed. Well, here's the poster child of underperformance strategy. There it is. I don't have to say it, folks. Look at the chart. Chart talks a million words. Bitcoin, last time it was 110,000. MSTR, 500. We're at 104,000. MSTR, 250. 50%. Oh, why did that happen? Bitcoin did not go down 50%. Oh, you know why it happened? Because MNAV got crushed. So if you don't understand MNAV, do not touch these folks. Don't. You're going to be, even if you were bullish on Bitcoin, which one would you have done better? Owning Bitcoin or owning MSTR over the last? Yes, you could have sold calls, you could have lowered your cost basis, but we're talking 250 points. In a year, you did not collect 250 points on your cover calls. You did not collect enough pennies in front of the bulldozer. So I'm just being realistic, man. I get frustrated because there's so much misinformation out there that people go like, oh, BMNR is doing this. Oh, it's not doing anything. It's not going to go anywhere. If Ethereum doesn't go up, BMNR is not going anywhere. But then people are like, you know, oh, yeah, this is going to happen. I'm like, okay, cool. To each their own. It's your money, man. It's your money. I don't know what else. I don't want to go through my whole watch list. Uber came up with earnings. There were okay earnings actually, but then stocks down like 5 yesterday. I don't like the company, honestly. Yeah, just kind of topping action. Oh, big hitters, UPST, Upstart, getting crushed today. Although one of my favorites, and if you do have followed me for a while, you know one of my favorites was Lemonade. Beautiful breakout after earnings today. Wonderful. A couple of my members actually own it. Talking about members, I have a members chat group. If you want to join, click join. Send me an email, sergio@sergioavadian.com. Well, you can do it in time for the members live today, but you will get my trades live, meaning like as soon as I do execute it, I'll post it. And you also get, at the end of the day, you get the positions live. So again, none of this trading financial advice, but I think the group is learning. But they got smashed yesterday, I can tell, because when they get smashed, the chat gets really quiet, and I'm like, okay, okie dokie. What else? I don't know. I'm trying to remember. So what am I getting in? What am I getting out of? I still have 50% cash or 60% cash, actually. All right, NVTS. Maybe we'll add at 85 cents. What are these highs that we broke out of? 936. Yeah, by that time, we should get them at 85 cents. Yeah, we'll just scaling. We'll do it 10 lots at a time. So what am I doing there? I'm selling the December 10 puts, buying the 10-15 call debit spread with that money. There's still money left over in case I do get assigned. I want to buy the shares below 10. That's the whole idea. So you look at it, you structure the trade. and then you do it, and then market's going to do what it's going to do. Market's not going to listen to you, for sure. This is the 2x ETF of SBET. SBET is still 0.85 MNAV. I think it's the best digital asset treasury company out there. Most reasonable one. Again, it's not going to go anywhere if Ethereum doesn't go up. Period. Don't question it. Okay? Don't. If you're bullish on Ethereum long term, then go buy SBET. They're staking it. They're staking all their ETH. They're the second largest ETH that, and selling at 0.85 MNAV. So a BMNR is selling at 1.3 MNAV, and SBET is selling at 0.85 MNAV. Which one would you guys? Would you guys go buy $1 for $1.30, or would you buy $1 for 85 cents? Again, if ETH goes down, they're both going to go down. No ifs, buts, sideways about it. For example, this thing was 15 5 days ago. It hit 1167 yesterday. Oh, why? Yeah, it went down 30% because ETH went down 30%. So let's not question it. But I do like it, and I'm going to hold it, and I created a little bit longer term position for it, and we'll see where it goes. Yeah, man, that's about it. I'll just go to the front, answer the last couple of questions, and then go have a cup of coffee and finish my day. Good morning, good morning. Good question. Both. I'm a techno-fundamentalist, I call myself. Fundamentals are important. Because of fundamentals is what's happening to those stocks with no earnings and no revenue, no nothing. I showed you 10 examples, right? There's many hundreds like that. If you don't understand now, fundamentals will stop you from entering because they're ridiculous, and you may miss some because momentum is there, and they're just pushing these stocks to levels that they don't belong. That's what will stop you. So it'll hurt you and it'll help you, but then it'll help you that you don't get caught with one of those 50%ers while the market's 1% from all-time high. I use both. So for momentum, I use charts. Again, chopsticks are charts. Charts are the past. Doesn't tell you what's going to happen the next minute. So I do believe in people who do technical analysis, but they're chopsticks. No indicator is live or future telling. They're all in the past. But it gives you a good reference point. Like when you look at a chart, oh, this is where it was. This is where it could go. And then patterns do repeat because enough people follow chopsticks to move stocks. But trust me, folks, do you honestly think an institution is trading by looking at what you're looking at on a daily chart or a 5-minute chart? Hell no. They're quant. They're doing all kinds of things. They're not drawing chopsticks on charts. So I do both. I use both. I use charts mostly just to get a reference point, especially on things that just broke out and pullbacks, things like that. Let's see if it holds. That's why I'm getting into MVTS now. I waited. It was at 18, now down to 9 and change. And I'm like, okay, I'll give it a shot here. Could I be right? Could it go to 6? Of course you could. But then, I'll turn the puts into put credit spreads. I'll buy some puts, whatever. So my idea is charts tell the past. They don't tell you the future. So whoever says so is a charlatan. They're lying to you. Run the other direction, because a lot of folks are charting BMNR. They have been charting. They drew lines that didn't work out. They drew another line that did not work out. Now they're drawing out. Oh, now it broke down. Oh, don't do it, folks. Don't listen to these people. They're a bunch of fools. Don't. All they do is, oh, Tom Lee's involved. And what about it? I mean, again, go Tom Lee, great, all good. I wouldn't buy anything because Tom Lee says so. Do your own due diligence, man. Or some influencer on X says, oh, look at this. I'm like, what about it? They all end in pain. There was a whole bunch of Beyond Meat bullshit going on X. Beyond Meat, I'm putting everything I have in it. Yeah, good. You just lost 85%. Knock yourself out. You have 30 more years to make that up. Or find another Beyond Meat or another GameStop. But you wait, it gets to you, you execute, like I have executed on Beyond Meat, right? I had puts, and those were dying from theta exposure, and then I turned them into put credit spreads and turned into a profitable position. You gotta manage, but you can't just go. And do people make money on Beyond from 50 cents to $10? Sure, but for each one, there's a bag holder now. So yeah. Anyway, that was the long version of the answer. I use both. Especially if I'm setting up longer term positions, definitely fundamentals. Like on Ethereum or Solana and things like that. Yeah. Yeah. So any other questions? No questions? All right. So let's recap. Monday, Wednesday, trading with Sergio, 10 a.m. Pacific, 1 p.m. Eastern. Friday, Power Hour, 10 a.m. Pacific, 1 p.m. Eastern. If you want to become a member of the channel, click join, send me an email, sergio@sergioavadian.com. I'll send you the Telegram chat group link. You get a bunch of perks. Obviously, you get my trades live, none of it trading, financial, or investment advice. What I do is risky. You gotta, if you follow me, it's at your own risk. What else? Oh, today we'll have members only live at 4:30 p.m. Pacific, 7:30 Eastern. Don't forget to subscribe on my website to my newsletter. The 3rd edition went out on Monday at noon Pacific. I'm not selling you anything. I just want your email to start financial literacy in the country, or to improve financial literacy in the country. And and the channel, if you do like the content, put a thumbs up, share, subscribe, more importantly, to the YouTube channel, and you learn a lot. One thing I say, you can't teach or buy experience. You got to do it. That I have. And last but not least, may all your shorts tank and may all your longs skyrocket. I'll see you guys on Friday. Have a wonderful week. Hope we make some money today. Hope, fingers crossed, we get back what we gave in yesterday. So, yeah, goodbye. Stay healthy.